Let's look at the interest rates.
Well, last month we were talking just before the OCR review. The Reserve Bank cut a quarter. Some of us got a bit of reduction from the bit of relief from the banks, but not the whole quarter. And some of us were pushing for a half. As a result of that and other things in the world, we've seen the currency strengthen. So all of my export interests sort of feel a bit of pressure as a result of that. We've seen about 10% on the currency in the past 6 months. And that for some of us is 10% less revenue as a result of the changes. So that doesn't make you feel too happy.
House prices?
House prices, well, we've all seen it. You know, I think if we'd have gone back the 2014 election when David Cunliffe fell over himself around capital gains tax, if he'd said if we have a capital gains tax we won't have $1 million houses in Auckland, there might have been a completely different reaction to it. So we do still sit in that distortion. Average house price is $1 million, 10 times median wages. It's a bit of a worry, and that all of the discussion around how do people get into a market that they're not in when prices are going up far faster than wages are going up. That's a broader societal question that we have to address. It's that policy framework. What do we change to stop that from happening?
Yep, and investment houses, of course.
Oh yeah, I mean the Reserve Bank has changed the amount you have to put down as a deposit for, and I've put a link in for the Reserve Bank for anybody who wants to read all the boring details. But essentially, if you want to buy investment property now, you have to have a bigger deposit. And I guess we see that discussion around house prices, and we worry about house prices falling. Well, if you think about it, if you're living in a house, what the price is doesn't matter. The price only matters when you come to sell it. And then it matters more or less depending on what you're going to do. Because if you're going to buy a bigger house, the price difference is what matters from the house you're selling to the house you're buying. If you're buying a smaller house, you know, those old buggers who are maybe selling the big house to buy a smaller one, well, we might lose. Well, maybe we should. I mean, I got a free education. I got a lot of things free that the youngsters don't get today. So actually hitting the people who are going from the big houses to the smaller houses might not be a bad outcome of a general decline in house prices to bring them more into line with earnings.
Immigrants, how does that fit in?
Well, immigration is more people after more houses, and there's the element of money from offshore and whether that money is clean money and how much money is being used around the anti-money laundering or money laundering processes. You take money that is ill-gotten, you bring it into New Zealand, you buy a house, you sell the house, the money is now clean. It's not ill-gotten anymore, it came out of the New Zealand housing market. All of those add to pressures in the market.
So there are pressures out there.
Oh, there's pressures everywhere. I mean, we're not building as many as we should. And I put a link in for that. Bernard Hickey did an analysis on how many houses we're building now compared to what we've done in the past, and that's well worth a read. We're not building as many houses, so supply is poor. We've got significant demand, immigrants, offshore money, a limited supply, and so the people who do have the money push up demand, push up price, pushing out the people who are struggling to get together a deposit and get into the entry level.
I guess it's called inflation to a degree, but wages don't seem to be moving.
Well, wages are pretty well stationary and have been now for some time. There's a movement, but we're in the sub 1% on average, and the movement of the median income to median house price in the likes of Auckland is up towards 10 now. So that's 10 times salary to buy the house. Now, I remember in the dim and distant when I was being lectured as a young man. It was a long time ago.
No, not that long.
You know, it was the comment was from the old boys who I was interacting with. You know, just remember, it's a year's salary on a car, and it's 3 years' salary on a house. Don't break that rule, and things will be fine. Now, that happened because of the rules of the game. It wasn't me deciding that. I couldn't borrow any more than 3 times salary, so that tended to lock down the prices you could afford to pay.